Good morning, everyone, and welcome to CVM's latest presentation on the CARES Act that has been modified by the Flexibility Act. My name is Richard Morris. I'm the tax director here at CVM, joined with John Comunale, the head of our Automotive Services Group, and Tom Hudson, our CARES Act guru. You may also hear the voice of Joe Kovacs, our marketing director, who's helping manage the technical side of this. With this program today, we'll provide you with an up-to-date information that will help you understand the latest developments with regard to the risk and resources available to you. While we've presented more than a dozen webinars on the Families First and CARES Act, each one's unique because the guidance has been continuous, ongoing, evolving. We've often had slides mooted by changes announced the night before. On our website, you'll find tools such as worksheets to help you compute your forgiveness and constant COVID-19 updates. You can't miss them. Big changes were signed last week into law, relaxing some of the hindrances that were thwarting qualification for forgiveness, and that's really going to be our focus today. There's really about 6 big points on that. Our hope is to take you through what's out there that you may not have thought about and how to sleep better at night. There's a lot out there on this. What we'll do is we'll stop after the explanation of the changes and address all the questions that have been sent in ahead of time. And thanks to you who sent those in ahead of time. If there's time, then we'll go through the nitty-gritty of the actual forgiveness application. We have a lot of people on here and we want to be able to take as many questions as possible, in addition to the questions we already have. So we have a couple ground rules as we get started to make it go as smoothly as possible. If you have questions you didn't already send in or we didn't address, feel free to add them to the chat function at the bottom. Everyone has been muted to start, but we may call upon you for your question and unmute you at that point. And if you're on the phone and you can't use the chat function, wait until we ask for questions on the phone and we'll take those. With all that covered, we start by handing it over to John Comunale to take it away.
Okay, that's a quick over. Well, first of all, here's our Washington Business Journal article that we were featured in. Okay.
Small business, big mission.
So an overview, this act was passed March 27th. I think most of what was passed then is pretty much irrelevant now because probably 60–70% of it has been changed. So May 15th, the SBA and Treasury, they released a loan forgiveness application, which we understand, and it's not the final application. So before you plan on submitting anything, you have to wait until the revised application comes out, and we're not even sure when that would be. And as Richard said, the Flexibility Act was signed on June 5th, 2020, which really seemed to give everyone the opportunity to have 100% of their loans forgiven, or to make it that much easier for that to happen.
So let me go through that. So it was signed last Friday by the president after it passed both houses by a wide margin. And it gives businesses more time and more flexibility to qualify for forgiveness. And that's the goal of this. You have more time to spend the funds to qualify for forgiveness, to rehire workers, to defer payroll taxes, and to repay loans. This clarified the intent that the cutoff date for loan applications remains at June 30. Okay, so the opportunity to borrow the funds still runs through June 30. So this has got to be all good, right? Because everything's more flexible than before. The downside of a longer covered period is it requires you to wait longer to apply for forgiveness. And this could affect your FTE calculation that we'll get to. The Flexibility Act gives 10 months after the last day of the covered period to apply for loan forgiveness. So for example, you got your loan on April 10th, 24 weeks equals September 25th. 10 months from that, July 2021, and it could actually go later than that if you go through December 31. However, if you fail to apply by the 10-month mark, you have to begin making repayment immediately. The longer covered period increases the burden to provide the necessary documentation for forgiveness, such as multiple 941s and state unemployment reports. Whereas if you're doing the 8-week, for most people, it'll be just in your first quarter payroll. Alternatively, businesses that began their covered periods on or before May 6 and use the 8-week covered period can, get it all in one quarter, which would be the second quarter. If you go with the optional 24 weeks, that'll be 2 quarters. It also allows employers share the payroll taxes to be deferred into 2021 and 2022. That was precluded under the original act. So there's greater flexibility there. We'll talk about the expanded coverage period. The decrease in the ratio is the big one. The FTE deadline is extended from June 30 to December 31, and then it's a more lenient payback period. If we can go to the next slide. And actually, as of last week, the SBA reported, 4.5 million firms had received loans totaling almost $511 billion. So about 130 billion remain from the second round of a total of 320. So that's where the June 30 number comes in, is there's still dollars out there to be had. The average loan size to date has only been 114,000. So it tells you the scale that we're talking on here. And loans of less than $50,000 accounted for 65% of the total. So again, it's really widespread. Top industries that saw it were healthcare, professional services, and construction. The sixth biggest point of this is it allows the deferral, until the date that you have applied for the loan forgiveness at that point. But if you've not completed within 10 months of the end of the covered period, that's when your repayment begins. So the deferral should provide borrowers additional time, sufficient time, some have said, to decide whether to use the 24-week period or retain the 8-week forgiveness period. This is really, a lot of bills are misnamed. This one's actually aptly named, in that it gives you flexibility to use 2020 hindsight, like the service does on us, to get to the end of the 24-week period if you think you need it, and look back and say, oh, you know what, I could have made it during 8. Obviously once you've qualified, you're done. You don't need to keep going. But it gives you this window to be able to go back if you're in business industry that couldn't qualify under 8 weeks. So we can go to the next slide. I think, John, you're going to talk about certification.
Yeah, this, I believe, came out May 15th, where the SBA said that if your loans were under $2 million, that it was automatically assumed you made the application in good faith, and you have a lesser chance of being looked at than loans over $2 million. Even though it's under $2 million, they could always come in and decide they want to look at your application and support it. And for dealerships, larger groups that had over 500 total employees, the affiliation rules were waived for them, and each dealership stands alone. So even though in total you're over 2 million, they are still considering that each dealership's a separate company and under the 2 million and a lesser chance of being audited. Although they could review a loan of any size at their discretion, and it's a 6-year audit period, I understand, after the forgiveness. So the statute doesn't run in 3 years. They have 6 years to come in and look at these loans.
It's a really long statute for what we're used to considering for regular tax purposes.
Yeah. Just quick refresher. I'm sure everyone is tired of seeing this maybe, but payroll costs capped at 100,000 per employee. Salary, wages, bonuses, etc. There's allowances for dismissal or separation, vacation, family, medical, and sick leave, health care benefits, retirement benefits. State and local payroll taxes are all included. That means mainly the state unemployment. Non-payroll expenses that could be covered. Mortgage interest on real or personal property, rent expense, you have to have a lease agreement in place, and utilities. Okay. There's some questions. Eligible expenses. Can you include bonuses and hazard pay? Yes, you can. Can you include pay to furloughed employees? Yes. Retirement payments handled. How are retirement payments handled? That is the employer portion of the retirement. 1099 employees are not really employees. They cannot be included. Big unknown is floor plan financing expense. You could interpret it that you can use it, and you could also interpret it that you cannot. We're still waiting for guidance, and even the NADA is not sure. They haven't taken any position other than that. Let's see what kind of guidance comes out. With the Flexibility Act, now we have some more time.
Just listening to the thing, same thing from yesterday.
To get that. Transportation expenses, lease vehicles, and gas used on these vehicles, as long as they're 100% business use. Rent paid to an affiliated company is fine. You need to have that lease agreement in place. Compensation does not include the qualified sick or family leave wages if you took the payroll tax credit. The key definitions: average FTE, full-time equivalent. It's average hours worked on a 40-hour week basis. Covered period is now 8 or 24 weeks, 56, 168 days. And that period begins the day you receive your first loan disbursement. The alternative payroll covered period is the 8-week, 24-week period that begins, which is the 24-week, begins also the first day the loan disbursement is received. You have to use it for all payroll calculations. And alternative covered period can be used by biweekly and more frequent payroll payers. I believe I just saw a question come. Well, we'll cut this off soon and get to the questions. How does loan forgiveness work? Spend the loan proceeds only on eligible expenses. Spend the proceeds on eligible expenses that are paid or incurred during the covered period or the alternative payroll covered period. And now 60% of the loan proceeds need to be on payroll costs, which I think a lot of people should be able to cover this for the majority of their forgiveness, and thereby lessening the burden of documenting the non-payroll expenses. Tom, do you want to take over from here?
Yeah, sure, if you want. So just at a high level going through this, we just covered what expenses are applicable. We talked about the covered period, and we're going to get into more about the mechanics about selecting that a little bit later. But first, let's just talk about the potential reductions you could face. There's a salary and hourly wage reduction. This is based on how much you paid your employees during the covered period compared to their levels pre the pandemic. And how this essentially works is you couldn't decrease anyone's pay beyond 25%. And there's a bunch of windows that you can look at to determine whether or not that actually happened. you have to focus on your covered period and the actual pay that you paid during the covered period, and that's how you're going to decipher this. Just want you to know it's there. It's something you have to think about, and there is a potential reduction based on the failure to pay employees the salaries they made previously. Also, there's the FTE reduction. Everyone's asking questions about this. It's the same concept. Did you keep the same number of people employed? We will go through how to calculate that number. And we do discuss some of the periods that you're going to use to measure that. And when we look at the 24-week period, we'll discuss about how June was removed from the bill, June 30th, to get your FTE levels back, and now it is December, and how that all really works together.
And Tom, to jump in on that, it's not the persons, it's the positions.
Yes, it's not the people. I want that to be clear. So it can be a new employee who replaced somebody who left, and that can get you to the FTE levels that you had previously. It doesn't have to be the same exact people. There's a lot of questions that people submitted, and we'll have answers to some of those about, well, hey, I had someone leave, I had someone fired for cause, and we discuss how that gets factored into the math for the application. Just at a high level still, when you come to the application, I mean, we're still waiting on the new one to be released because the Flexibility Act kind of invalidated the one that was out there right now when they changed all the rules. It kind of, but a lot of the core concepts we think and we anticipate are going to exist in the new application. Granted, there will be a few changes, and I hope they don't throw us a few curveballs. Maybe some good curveballs would be welcome, but there's some things that we just like to cover and say, hey, this is what you're going to need when you have to do the loan forgiveness. You're going to need the SBA PPP loan number that was assigned to you from your lender, and then your lender also has a unique PPP identifier. You're going to need that for the application too. You'll need your loan amount, obviously, the date you received your funds. They ask you specific questions that aren't exactly factored into the math. I think it's for informational purposes. But the SBA obviously has an objective here in asking how many employees you had at the time of the loan application, and then how many employees you had at the time of the forgiveness application. So they want to know what were your staffing levels when you tried to get your loan, and then what are your staffing levels when you submitted for forgiveness. They also ask about the EIDL advance amount. Everyone knew there was a program running alongside PPP with the EIDL, and that was more of an actual loan program that didn't have a forgiveness function. There was also an advance portion where you could receive $10,000 potentially in an advance, and if you did receive that, it gets subtracted out of the amount of loan that can be forgiven so that you don't essentially get a double benefit. That's their purpose here. But if you received an actual EIDL loan as well, that amount isn't going to be factored in this application. So that's set aside, and you don't worry about that for now. They're going to ask your payroll schedule. There was checkbox on the old application that said, hey, do you pay your employees weekly, biweekly, monthly? What is that logic? And it's helping the SBA understand how your payroll cycle is going to fit into the covered period and what to expect. So it's kind of setting that out front. They'll also ask you, you're going to be electing now your covered period. In the previous application, they wanted to know what the covered period was and where your 8 weeks fell. Now you're going to be able, and I'm not sure how it's going to work specifically, but elect the 8 or 24. And there's a lot of questions about that. Hey, maybe 10 weeks works better for me. Well, it's either 8 or 24 for right now. So now that we've kind of covered, hey, high level, this is what it looks like. This is what you may have reductions. Here's the information you'll need. Let's hop into some of the questions that were submitted in advance. Thank you to everyone who did do that. I really appreciate it. It gives us a little bit of a second to make sure we're prepared. But let's jump into the first one. First, does the Flexibility Act, or does the flexibility allowed under the Flexibility Act apply to those businesses receiving loans during the initial wave of PPP loans? This is a great question. And if you look at the actual bill, you'll see that the Flexibility Act made direct changes to the CARES Act. It was kind of strike this, strike that, and it removed the June 30th safe harbor date from the original bill and inserted the new safe harbor date of December 31st. We'll get to that, but I'm just explaining how this worked. It added the language for the 24-week covered period, and these types of changes, they were automatic, for lack of a better term, for a lot of the current participants in the program. Things like the 24-week cover period, that'll be selected on your loan forgiveness application. But a lot of the changes that you hear about, they are automatically applied to you, except for one item, and that is you need to be aware of the change in the terms of the loan repayment. If you received your loan before the Flexibility Act was passed, then you need to contact your lender in order to renegotiate the term from 2 years to 5 years. It's not exactly explained how that'll work yet. I imagine it's probably just an email to your lender and assigning a form or two. There shouldn't be any difficulty in doing so, but you are required to take action in order to achieve the longer loan term, and that's 2 to 5 years, again, as a reminder. So that's the only item that you need to take action on, and all new PPP loans that were approved after the Flexibility Act, so as of last week through the end of June, they will automatically have this 5-year term. So that's the one item you need to be concerned about, and it's more so if you're looking at having to pay back part of this loan, potentially you could get a much longer term. Next question. Somebody asked, is the selection either 8 weeks or 24 weeks and not flexible to end when you have maximized the loan amount? This person said, hey, 10 weeks works good for us. And I certainly understand that. Yeah, 24 does seem kind of long. 8 seems kind of, I'm not sure if I can get all of my funds spent in there, but this is a common question we've been getting at CVM. The answer is that the options are either 8 weeks or 24 weeks. You can elect to use a covered period that has a duration other than 8 or 24 weeks. While some people may find that 10 or 12 weeks is kind of the sweet spot, you need to adhere to one or the other, unfortunately. Now, it's important to note that if you select a 24-week covered period, then that period is going to get, that's what you're going to be using for the measurement of your FTE counts and your salary reductions, because the covered period that you select is used in a lot of other pieces of the application, and has a big effect on a lot of the reduction calculations that you're going to be doing. So while the 24-week period does give you a longer duration to spend the funds, you must also be maintaining those staffing levels and pay levels for a longer duration as well. And if you can't, then that's where you'll begin to focus on bringing staff and pay back to pre-pandemic levels by the December 31st safe harbor date. So there's a lot to think about with choosing that. We're going to talk about safe harbor a little more, but that's something to be aware of. If you select a longer date, you have more time to use your funds, but you also subject yourself to maybe more restrictive
jump in on that, Tom. I mean,
yeah, sure. Go ahead, Richard.
If you can meet it under 8, it's probably prudent to meet it under 8, because that way you're done. And if you extend to 24, it's great that it gives you more time to spend it, but then you also have to make sure that you're meeting the FTE requirements as well. So I mean, it's great to have that option. And also remember, you always have the flexibility to look back. Okay, the government's not going to come to you and say, why'd you do 8 versus 24? But you know, if you know you've made it under 8, you know, I think your work's sort of done at that point. If you've not, then you have to look at the 24 and say, okay, how do I get my, and really the FTE seems to be the challenge for most. How do I get my FTEs where they need to be at 24? So, and
we have I'm sorry, Richard.
No, we have go on to the third one at that point, because it's all about the FTEs at that point.
Yeah. So we have a question about the FTEs. First, let's cover 3. Because I think they're related. How do I calculate my FTEs? And also, if the extended covered period is chosen and personnel are not brought back or there are layoffs, will this count against the company for the FTE reduction? So, first, FTEs are calculated by finding the average hours worked per week during the covered period and dividing it by 40. So we were just talking about 8 or 24 weeks. Your FTE calculation and the average numbers per week is going to be influenced by whether or not you select the 8 or 24 week covered period, to be clear. You need to do this calculation for each employee, and the maximum value anyone can reach is a 1. So you'll need to round each calculation to the nearest 10th for anyone who doesn't exactly work 40 hours. For instance, somebody who works 30 hours divided by 40 hours, then you're getting a 0.75. They round it to the nearest 10th. That person's value is a 0.8. So you need to use this logic to tally up all of your numbers and arrive at your total FTE count. There is, for simplicity's sake, an alternative method that's slightly easier, where if you have an employee who worked 40 hours, they are a 1. And anybody who didn't work 40 hours, they're just a 0.5. So you can select between either two of these methods. I think this concept will still translate into the newer application because there's nothing that necessarily changed here. But you'll have to figure out which one will maximize your total FTE count, so they're both available there for you. The question that we just had submitted that's related to this, For the FTE reduction, do you need to calculate the average number of FTEs during the 8 or 24-week period, or do you just look at the number of FTEs during the last week of the covered period? This is for the duration of the covered period. So if you select 8 or 24, you're looking for average salaries throughout the 8 or 24 weeks. And also, I know a lot of folks use payroll providers. I know some of these payroll providers are on top of trying to get reports that are readily have this type of information available. So if you are working with a major payroll provider, it could be something you can ask them about if they have it available. So just want to make note of that. Regarding, hey, I'm having trouble getting people coming back, or there's layoffs. So how this all will work is if you can achieve your loan forgiveness within the 8 or 24-week covered period, and you don't have any reduction due to salaries or any reduction due to losses in FTEs, then you should be able to go ahead and apply for your loan forgiveness, and you don't have to retain the employees theoretically beyond that loan forgiveness period, because everything was achieved in the covered period that you selected, and you didn't have any reductions, so therefore you're not relying on the December 31st safe harbor date. So if you choose a covered period, you have to be careful of potential layoffs and then maybe a change in business. And we discussed before, 24 weeks kind of expands the possibility for all of that to happen. So obviously 8 weeks, if you can get it done, it'd be a better option from a risk standpoint. Another question, just real quick, someone shot in the chat. Is the calculation of an FTE a snapshot or an average over the period? It is the average over the period. If someone started, it depends on whether or not they're a new employee. That can only benefit you if they were replacing somebody. Then you have to figure out when the other employee left and when this other employee was added, and you have to do the math there. Another question: if you restore the number of employees during the last week, you reach the safe harbor? No, there's nothing that discusses the last week of the covered period. I'm not sure where exactly that's coming from, but the last week of the covered period, is treated just like all of the other weeks in regards to the math. The safe harbor date has to deal with look back periods and comparing how much you employed, how many people you employed, and what you paid them during the covered period, compares that to before the pandemic. And then if you didn't reach that, that's when you start to look at December 31st as your saving grace. Let's move on to the next question here. So the fourth one is there a final list of what can be used for the 25% share of the PPP? This is a good question, but this is referring to the non-payroll costs, and I want you to note that it is 40% now. So we don't think 75-25, that's outdated logic. We're thinking 60-40 moving forward. All we have so far is what they've listed, and it's mortgage interest, the rent on leases, and utilities. And utilities kind of has an et cetera involved, so they did expand upon what's included in utilities. We have water and sewer, we have electricity, and we have telephone. A lot of people are saying this includes cell phone, internet, and gas and transportation. So these are the ones that have been named. The CARES Act states that gas used for driving a business vehicle is also forgivable using the PPP proceeds, which kind of infers that the gas expenses and the vehicle expenses associated with that are also permitted. But regarding all of the different questions, I really think it comes down to what the bank thinks. In the event that we do not ever receive any clarification but from the SBA, you have to guess that this is one of the items that they're going to come out with a finite list and say if it's not on this list, it doesn't count. I really hope they do that because this is kind of a gray area. So the only answers we can provide right now is kind of really based on interpretations of what we have now. And what we've been leaning on is, hey, have you been paying it before all of this happened and you continued paying it? And does it really kind of fall under that utilities umbrella? I understand that that's vague, but that's where we are with this specific situation. Next, is floor plan interest eligible for forgiveness? I love this question. I've seen it a lot. John covered it earlier. There isn't an answer about yes or no yet, and that's all we can go on right now without anything that clearly states it.
Tom?
Yes, sir.
Yeah, and it's just unclear if floor plan loans are personal property mortgages. And also another unclear item on that is whether or not it would cover inventory added after February 15th. they have had plenty of time to address this, but nothing has come out. I would keep track of that expense, and hopefully, within the next few weeks that this will be addressed.
Yeah, that's a big one, I know, especially for all of our dealerships out there. And John's right on it. I know all of you are optimistic, but I'm sure the SBA is waiting and itching to answer all these questions for us, but they're also at the mercy of Congress right now, and I'm sure they don't want to release anything preemptively and then
There
end
was
up having
another
to.
question in the chat box on real estate taxes as a covered expense. I do not believe that would count. I've seen nothing allowing that.
Yeah, I would argue, I'd look at the lease and see if you're paying the, real estate taxes indirectly or directly yourself. I'd argue that if it's included in the rent payment as one total, perhaps, but if it is separated out and you make that payment separately, I am not sure specifically if that would be allowed. All right, so let's move on to our sixth question. Someone wrote in, and I like to hear this, this is great. We used 100% of our loan proceeds toward payroll costs. How am I going to fill out this application, and what do I need for proof? You're in a great situation. If you didn't have any FTE reductions or any salary reductions, then you're going to have a comparatively easier loan application. As I said before, we are waiting on that new application to be released, so I can't exactly say, hey, this is what you're going to do, at least not definitively. But we'll know more once that new application does get released, and I expect it should be here soon, hopefully. Regarding the documentation, the outdated application did provide examples regarding what is required to support your payroll costs. They listed bank account statements, third-party payroll reports if you work with a provider, payroll tax forms, the ones you'll be submitting and paying all your payroll tax with to the IRS and the state, any payment receipts, canceled checks, account statements that really show the flow of the money. And for your non-payroll costs, I know you didn't ask about those since you don't have them, but for anyone who does, they're asking for the lease agreements that support the rent payments, any mortgage statements that show the mortgage interest that you paid, and then of course all the statements that would substantiate the utility payments that you made under that utilities, etc. umbrella. I see a question coming into the chat. Someone's asking what documentation is needed to apply for an exemption to the FTE requirement for employees who voluntarily resign. We're going to get to those exemptions, but just to answer you out front, I mean, their resignation email would probably be appropriate, whatever they use to submit that, any exit forms, any particular HR processes that you have for offboarding an employee. Just make sure all of that is clearly documented, and you should be able to receive an exception for somebody who voluntarily resigned during the period. All right, let's talk about question number 7. This one was submitted. Do wages for new employees hired after 3/31 count in the wage calculation? So yes, if these are new employees that you hired, then they'll only help you in your calculations. The point of this is to keep people paid and keep them employed, and if you're able to go above and beyond and hire more employees, right now the way the math works, you should be in a relatively better position to achieve that loan forgiveness. Then you also have to think about, well, is this new hire somebody who's replacing somebody who left? You have to think about that too, and that gets handled a little bit differently. But just remember that you are able to replace employees. It's not attached to the specific person, that position, but rather the number of bodies, to put it pretty bluntly. 8, somebody asked, we have part-time drivers who are only used on an as-needed basis, and they don't have a set schedule even though they're W-2 employees. So this is a good question. You can't choose to exclude anybody from any of the calculations. You need to really think back here and evaluate how these employees were considered in the calculation of your loan costs. And you want to focus on keeping their hours and compensation at the levels that they were for the prior year. So this answer is really math dependent. I can't give you any specific details unless I see some of the numbers. But theoretically, whatever they were accounted for in your loan application, whether that's X amount of hours per week, and I understand that they may not exactly have been needed as much during this time period, but it's unfortunately, I think, one of the mechanisms of the bill that really didn't account for situations like these. So you're going to have to look at the math, unfortunately, and see how that works. This is a big question. Next here, number 10, we have everyone asking this because they made it before there wasn't exactly a time period. Someone asked, how long does the forgiveness process take once submitted? So to take one step back, before there wasn't any timeline that said, hey, you need to submit your application within X amount of days for forgiveness. There was loan deferment. There were 6 months where no payment were necessary to be made. They struck that from the bill with the Flexibility Act, and they added a new 10-month period where you have 10 months from the end of your covered period to apply for loan forgiveness. And if you don't apply for loan forgiveness by the time 10 months of the end of your covered period happens, then you're going to have to start making automatic payments. So this one is more focused on, well, how long is this going to take once I submit my application? So the lenders, they have 60 days, your banks, and they're going to be hard pressed, I imagine, to get all of this done. So we'll have to see where it actually falls. And I imagine they will scrutinize the applications. I'm not sure, that's speculation, but the lenders, they have 60 days to determine whether or not this applicant will receive forgiveness and how much. They submit that application to the SBA. They submit that information right to them. And then the SBA has 90 days to review everything, and what they say is ensure procedural protection before they remit the funds to the lender that satisfy your loan. I imagine at that point, that's when the lender would inform you that everything has been approved, and I guess there will be legal documents that cover this specifically that will be sent to you. But that is the process that's been laid out right now. Will it change with the new application? Maybe. Maybe. I could see that happening, especially if they changed covered period and applied, longer timelines to things like the safe harbor, et cetera, and gave applicants in general more time to reach that loan forgiveness. All right, let's talk about question 10. Question 10 is, if we submit our application for forgiveness, receive approval, and then let an employee go before December 31st, are there any ramifications? I like this question because it gives me the opportunity to talk about how December 31st works, but this depends on a bunch of other factors. So let me remind everyone that the December 31st date, it's a safe harbor date that is used to get out of a jail free card, kind of, when it comes to the FTE and salary reductions. If you have not had any reductions in FTEs or your salaries beyond 25%, then you do not have a reduction in forgiveness, and therefore do not need to focus on the December 31st date. In practice, you could technically achieve forgiveness, then make any staffing changes you wish without any type of penalty. So if you did have reductions and you're subject to a loan forgiveness reduction, December 31st is your saving grace date. You can get your staffing levels and your pay levels back to December 31st and get out of jail free card and potentially receive full forgiveness. Okay, so you're only worrying about December 31 if you're having reductions. That's the high level statement that I want everyone to take away from this. Now, one thing I was evaluating was, what is exactly the date for December? Is it a snapshot, December 31st, or is it a period before? So this one I've just been speculating on recently. I think it's as of specifically December 31st. December 31st on the application, or previously it was June, they said, what's your count at this date? What are your salaries at this date? And that was what was used to calculate safe harbor. But some of the language does say you can do it before June 30th, December 31st now, but to say, hey, you can get your levels back to that beforehand. So I'm waiting to see how this evolves, because it appears to be a snapshot based on the prior application, meaning if you select 8 weeks, 24 weeks, and then you have reductions, and you're going to rely on December 31st as your safe harbor date to get out of that reduction, you might have to keep everyone's staff employed all the way until that date, even if you achieve it beforehand, in order to achieve the forgiveness, based on how the application is designed and implemented right now. So that's something we're going to have to watch, evaluate, and hopefully we get a clear answer on how that functionality is going to work exactly. But high level, you don't have to worry about it unless you had reductions. December 31st is not a concern.
Hey, Tom.
Sir.
I have a few questions in the chat box I'd like to go over real quick.
Sure.
What documentation is needed to apply for an exemption to the FTE requirements for employees who voluntarily resign? Don't remember seeing anything specific other than something in writing, a letter of resignation or even an email from that employee, I understand would suffice.
Yeah, that's correct.
If we choose 24-week cover period, will the forgiveness be 24 weeks rent or 8 weeks rent? That would be 24 weeks of rent if you choose that period.
Yeah, to reiterate, you're picking this covered period for the rest of the application, and everything else will now follow 8 or 24 weeks based on your election. So it's one or the other for everything.
You can choose. It's one or the other, either.
But you got to stick with it.
Period.
Yeah, if we have several employees that have been out on EFMLA and we're taking payroll tax credits, are those credits reducing the forgivable loan amount or the expense that qualified for forgiveness? That would be yes. You can't double dip on this.
Yeah, so you have to be careful. I mean, there was a bunch of options out there. So the Flexibility Act does allow you to do the payroll tax deferral, but not if you were taking any credits against that. So this is something that we'll have to look at and focus on if you were out there taking advantage of a lot of the programs. But they do interact with each other, so you have to be careful. And there are changes with the Flexibility Act, so I'm cautious to speak one way or the other right now, but do be careful with making any type of adjustments for those credits. How about that next one, John? We got a question about FTE safe harbor. All right, let's hop into it. Somebody asked if the FTE was reduced to 75% of par for the first 4 weeks, hitting safe harbor would require getting 125% of par for the second 4 weeks. Your interpretation, safe harbor is an 8-week average. Not getting to par by the 8th week of June makes safe harbor nearly impossible. Are you positive by your interpretation? So you do have a valid point. That is the math. You're going to take the average throughout that period, and we all know how to calculate an average. So if the employees were reduced significantly during the first 4 weeks of a covered period, you would actually be unable probably, actually no, we're taking a weekly average. So you would have to employ them a greater amount in the following period, at least to make up that room. So that would be something to, in the event that happens, the safe harbor is not impossible, because if you retain your levels based on all of the different coverage periods that they're going to use, there's multiple windows that we're going to use to compare. So I don't want to write it off just yet, because it all depends on your FTE levels before, following some of these other dates, and then comparing that to the covered period. So there's multiple chances for you to get out of some type of reduction. But in this case, if you do have a significant FTE loss and you're unable to reach this FTE levels you had pre-pandemic, that's what the point is of the December 31st safe harbor. They're saying, hey, we understand it was hard during the covered period and you may have been impacted in different ways. So we're giving you the chance to get all the way back to December 31st, where everybody hopes that we can be out of this by then. And if you have your staffing back to the levels you did pre-pandemic, then you don't have any type of reduction at all. So there is a saving grace, and that's the purpose of the Flexibility Act. They're like, hey, June 30th is too soon. That was the thought that Congress had in their head. So December 31st is the time that they're giving everybody to get everyone back to normal, and that's their hope. So I understand the frustration with the covered period. If somebody was cut on hours up in front, it is going to affect that average. You have to play with the windows and evaluate them and look at the math to see whether or not you achieve safe harbor, or at least FTE reduction initially, and then the safe harbor is supposed to be the saving grace. So focus not on June 30. June 30 has been struck from the bill. We don't want to talk about June 30 anymore. December 31st is how you can get back to it. Let me hop into some of the next questions here. All right, this one's been asked. We did cover it. How do resignations affect FTE accounts? We have here. So initially there's multiple exceptions. When you're filling out the application, they said, hey, if you had anyone who did A, B, C, or D, we're not going to penalize you as an employer for that. And A, B, C, and D, those things are indicate. So these are a number of positions who turn down a good faith offer to rehire them. We all know that the employment situation, the unemployment was increased for employees, and some employees chose to perhaps stay home and collect that in against coming back to work. So SBA is not trying to penalize you for that. They understand that does happen, and so if you have the documentation, which is written letter offering this person their job back, and then their actual decline of that offer, document all of that and keep it for the purposes of submitting the application. You don't get penalized. You add an exception, and it shouldn't impact your FTE accounts. If there's someone fired for cause, voluntarily resigned, or voluntarily requested a reduction of hours, you don't get penalized for that. They are an exception. That gets accounted for in the application. You shouldn't experience any FTE reduction. So documentation is really the key for this. You want it, whatever processes you have, any emails, communications you have that demonstrate this decline of an offer to return or any voluntary resignation or reduction in work hours, you need to make sure that you can document and prove that that actually happened in order to substantiate that exception that you chose. There's also, in the Flexibility Act, this was one of the biggest pieces of the Flexibility Act, there are new ones that were added, and that includes the inability to rehire individuals who were employees as of February 15th. They're essentially saying, hey, we couldn't get people back. They're not trying to penalize you for that. How this works, I think more clarification is needed. They also added, if you were struggling to hire similarly qualified employees for unfilled positions before that December 31st date, they're going to let it slide. How's that going to work? How do you substantiate that? I think it's going to be a tough argument, but hopefully the SBA has more answers as to what they're looking for this specific requirement. And then the biggest one here was they said if there's an inability to return to the same level of business activity that you were at before the 15th of February due to all the different compliance requirements established by the Secretary of Health and Human Services, the Center for Disease Control, and any OSHA restrictions that were placed on your business, if you were unable to get back to regular levels due to those restrictions, there should be an exception. That one is pretty vague. The word is out of Congress was that this was focused on restaurants, because some of these restaurants may have went out early and applied for PPP loans and then were simultaneously told that they were not allowed to open. I think they were thinking about businesses like that, but that's no reason to say that this wouldn't apply to a bunch of other businesses. I think there's a lot of arguments that could be had here for or against. Again, we need the SBA. This is very new in that it was just in the Flexibility Act, so SBA hasn't had a chance to outline what this necessarily means and how to achieve it, essentially. So we're going to watch that closely. Let me hop back. Does the business need to show a loss of revenue? This one ties back into the last question that we just discussed. I think for the whole forgiveness process, any change in revenue that you have, it does not have any impact on your forgiveness. I mean, you could be having, I hope someone is, the best year ever that they've ever had. And it does not impact how much you can achieve your forgiveness at all. It all focuses on the staffing levels and the pay levels. So as long as you meet that and you spend enough on payroll, then that's what should be able to achieve forgiveness. If it comes down to the restrictions we just talked about, does your revenue matter? Maybe. It could be part of the argument where you're saying, hey, my business couldn't get back to the same level. One of the things you could point at in order to support your argument would be, hey, look at my changes in revenue, look at my loss in revenue. So I don't want to say it doesn't matter entirely. It could for some people in different situations. Somebody asked, hey, can I include in the forgiveness the employer portion of the federal payroll taxes that I pay, Medicare and Social Security? No, they don't want to give you money to eventually pay back to them, is the logic there. So that portion is not allowed in forgiveness. Next question. After the covered period ends, is there a deadline within which the loan forgiveness application must be submitted? So we did talk about this briefly. The new bill does allow for the deferral of all the payments until the date on which the amount of the loan forgiven is remitted to the lender by the SBA. So you have 10 months, essentially, is the de facto countdown. where your loan payments will start. So it isn't exactly a deadline for the application because there isn't exactly one, but you will have to start making payments within 10 months. So it kind of de facto becomes the deadline for forgiveness. So just be aware that there isn't necessarily one to apply. I don't see the reason on waiting besides really looking at those safe harbor dates and looking for potential forgiveness. In most cases, I'd advise get it done as quickly as possible. Again, if all of it looks good and complete and you've achieved forgiveness from your perspective. 15. There's a discussion about PPP and how it's not deductible. How does this impact the preparation of W-2s and all the non-deductible items? And will the non-deductible items be taxable to the end user or employee? This is a good question. So the IRS did come out and say, hey, we're not letting everybody double dip. And if you receive any dollar that you use towards the forgiveness of the loan forgiveness, so any of those payroll costs, non-payroll costs that were included in your application and did help you achieve forgiveness, those can't be deducted. When it comes to wages to the employees, they're going to be the same. Nothing's going to change for them. Their W-2, it wouldn't have any type of reduction for a salary that they received during the covered period or if it was eventually forgiven. There shouldn't be any change on their end. So all you're looking at is having to isolate the expenses and not being able to deduct those specifically.
Hey, Tom, there is a bill out there to potentially make allow these expenses to be deductible. They want the IRS to make an exception in this instance.
Right.
It seems to be promising that this would be passed. And also, I just got some news, just breaking news. The NADA has not heard anything back from the SBA as of yesterday on floor plan deductibility. NADA's take is we have a 50-50 chance of getting those expenses to be deductible, and that was as of yesterday. I think real quick, a couple in the chat box, Tom.
Sure.
Is it cash basis for payroll or can you use accrual basis? I think on the back end, you could use accrual for incurred pay that wasn't paid until after your covered period.
Yeah, so this one is highly debated, at least in our practitioner community. So it's not exactly one basis. A lot of the guidance that they've released from the most recent interim final rule and the instructions on the previous application seem to suggest that you get the best of both worlds. Not everyone's in agreement, so I want to be careful when I say this. But it seems to be, based on the language, my interpretation that if you have a payroll in May and you don't receive your loan until June 1st, and then you cut a check on June 5th for that payroll that occurred in May, it is included in the loan forgiveness. Mm-hmm. Some people are saying, hey, it's kind of unclear. It's a bit ambiguous. It doesn't say that. But this is one item where we're really waiting for the SBA to come out and say yes or no because we think it has a big impact. And that's really on the front end of the covered period where the people are in disagreement. But just know that that hasn't been decided yet and it's on the table. On the back end, if you're in the end of your covered period and you have a payroll that will, say it covers the last week of your covered period, but then you don't actually pay all the paychecks and the rest of the payroll period will fall outside of your covered period window. They're saying you can accrue the expenses that were incurred within the covered period. So if that's 7 days out of a 14-day payroll period, you could put half of that expense and include it towards loan forgiveness, as long as you don't change the payroll date and it actually ends up being paid. I think that's one thing that they wanted to drive home. Hey, don't change anything about it, and we'd like to see you actually pay it if you do incur it and include it. So that's a very good question that a lot of people have had, and that's our take on that. So I know it's not a definite answer, but to be frank, this changes every single night.
There was a question on, does the $15,835 limit still apply? That's for 8 weeks. For 24 weeks, I believe you would get 3 times that amount.
Right.
Yeah.
Right,
so
because it's a ratio of 52 weeks.
Right.
100 over 52 weeks.
Yeah, it's an annualization, so the pay rate should be relatively the same, is what they're going at. So yeah, 24 weeks, it would be 3 times that amount, and that would be the limit because they're keeping you at under $100,000 pay rate through the covered period. So that is
that's
correct.
46,153.
Yes.
The employee portion of Social Security and Medicare taxes is counted toward forgiveness. That's correct. That's part of their wages. I mean, it's in their gross wages. So that is essentially the same as deducting the employer portion? Correct. No, I don't believe that is.
No, they're just disallowing the employer portion of the payroll taxes.
Right.
The federal government doesn't believe they should be giving you money that you take and then turn around and pay them. They tried to make it easier by making it simple and just focusing on gross wages for employees. Can you think about what type of a mess this would look like if we had to remove that from employees as well and then look at annualization rates, et cetera? It would be pretty messy. So that was their logic there, and that's what the rules are. Sometimes they just don't make flat out sense, but that's what they're working with. Somebody asked, do you have to choose one between paid or incurred? No, it says it needs to be paid or incurred. That's the criteria for fitting into the covered window, and that's why most people have interpreted this to say, hey, they're kind of giving us the benefit of the doubt with the covered period by maximizing it. And in theory, people have speculated that you can fit 10 weeks almost of payroll into an 8-week covered period. So they're trying to give you the benefit of the doubt there. You can choose paid or incurred, but that's the criteria that they specify. They do come out and say, hey, you can only use it once. So paid or incurred, only use it once. I don't know why, in what circumstance you could try to count something twice, but they did come out and make that clear. Which question here? 16. Somebody asked, we had a lawsuit, and we had an employee who, they get a settlement that was $100,000 in wages, and can they include that payment? I think that question is not addressed anywhere. It does meet the criteria for paid or incurred. But I would be very careful with trying to include that because it's kind of one of those unforeseen circumstances that I think may be outside of the confines of the purpose of this bill, but I can't give you a definite answer.
I'm going to jump in to muddy the water. Because assuming you're settled for wages, which it says in there, I don't know why you wouldn't annualize that and then, include the pro rata portion of that. So... in other words, if the person was already over 100,000 annually, I think you're out of luck. I think if they're below that, but obviously there's nothing on point on this, but if it's for wages as opposed to something else, my thought would be that you would annualize it.
Yeah, so they'd get the maximum 15 at least all the way through.
Right.
The cover period. Yeah. So it potentially it could be included. I'm just wary of giving you an incorrect answer because that one is really controversial, I guess is a term to put it, at least according to all the language. It could qualify, but is it allowed? I don't know. That's up to your lender. Maybe check with them, and then maybe their interpretation as well, and ultimately what the SBA decides when they review the application for forgiveness. And
there's still some time.
Yeah, there's time. We're expecting a ton of guidance to be dropped on us. I know I saw some inside talk that the SBA has over 30 FAQ items, which is how they've been answering our questions through FAQs, to release. But they were waiting to see what the Flexibility Act did, so that kind of put a delay, I think, on a lot of that. So I have to believe that the SBA is itching, their trigger finger is itching with a bunch of information that they'll be able to drop on us one night, and we'll be able to have a lot more answers. Somebody just following the last few questions here, these are the last two. We'll get to those and of course ask for other questions. Must transportation expenses be incurred or simply paid in the covered period? We handled that. So for non-payroll costs, it isn't paid or incurred. So that same logic that we just discussed, it'll apply to these transportation expenses in question. To expand upon that question, is the reimbursement of employee mileage and airfare included? And then is cable television access considered a utility? So those fall under the transportation logic, transportation costs. We came back. I want to go back to saying, hey, we don't have a clear answer on what expenses really fall in and out of these broad terms. So I would be careful here. If you could achieve forgiveness without it, then I definitely recommend doing that. But if it is a large portion and something you're interested in using the funds for, I can't give you a definite answer right now without that clear guidance from the SBA saying, what is included. Cable television access, maybe. If internet access is included, maybe there's a lot of people pay cable and internet together. If those are included all in one bill, I would say go for it. I think it depends on what type of business you are specifically. If you can include cable television, I doubt they want people to cancel all of their television subscriptions for their businesses during all of these lockdowns. So that one, I can't give you a definite answer. Again, I honestly think, if you can achieve forgiveness without it, go ahead. But if it's a big expense, put it on the application, send it through the process. If we don't ever get an answer, let them decide. And if everyone approves it, then that's great. Last question that we had here, everyone was asking, this is a common theme, what type of documentation is required to demonstrate the inability to hire qualified employees? Please provide detail regarding that inability to return to the same level of business safe harbor. So these are the exceptions we discussed earlier. And the guidance is broad. They said, hey, if you suffered business, if you couldn't get back to the same level of business activity is the way they put it as before. That's so broad, and I feel like lawyers could discuss this one for days on end on each side without any clear cut, hey, this is what SBA is looking for. I don't know how you can necessarily demonstrate that. I feel like I'd throw the ball back in your court. You guys know your business is best, and you can probably understand which metrics would help you to explain, hey, I haven't been able to get back. And then you could be, I would look for resources such as emails that were sent to you by authoritative sources that said you can't do this, you can't open your dealership, you can't open your restaurant, whatever type of entity you may be. And you can rely on those as part of your argument to substantiate this return to business level of safe harbor. So what documentation is required for that? I think it's to be decided. But regarding hiring qualified employees, maybe this one could be a job ad that went unanswered, or the collection of resumes that you received, maybe if you did get any that just weren't up to par for the position that you were trying to hire. Again, any piece of information that you can use to support your argument would be beneficial here, so save that and keep it. And in the event that you need to rely on these safe harbors, which I hope you don't, they would be something you have to argue and support as best as you can. So that's it for our previously submitted questions. At this point, we've got a few minutes if anybody wanted to submit more questions into the chat. If you need to somehow indicate to Joe, I'm not sure how they could do that, Joe, whether or not they would like to speak on the phone, we can go ahead and take questions via the phone. This is an answer session for you guys, so go ahead and throw what you got at us and we'll do our best.
I think people should be able to unmute themselves, but if you are having trouble, please write your name in the chat box and I'll see if I can help you out.
Hey, Joe, these slides will be available to everyone on the presentation?
That's correct. I'm going to send a follow-up email with the slides and a link to an evaluation form. I'll do that later today.
Yeah, and to be clear for everyone here with us today, we included the submitted questions on the slides, but there's an additional 20 or so slides behind this, which does include a lot of the logic laid out on the slides about filling out the application and some of the math that you'll have to do for the FTE and salary reductions. And we have a bunch more information back there, some that's relevant to small business owners, et cetera. So it's there and it'll be sent to you.
So have all the expenses now been, has increased for the 24-week period from the 8-week period? So earlier, if we were taking rent for the 8-week period, now we take rent for 24 weeks. Salary is now 24 weeks to calculate the loan forgiveness amount.
So remember, your loan amount is going to be one static number. What they're doing by extending the longer covered period is giving you more time to reach whatever 60 or 40% of your total loan amount actually is. So essentially, it's just a longer time to spend the same amount. So you have to think about how the program is working here. you have a set loan amount. So you have 8 or 24 weeks to spend if you received $100,000 in a total loan. That's how it works.
So just one last qualification. So if the salary amount was for say 15,385 for 8 weeks, now it's 46,165 to spend, right? So my amount has increased to spend, right? Even though the loan amount is the same, but the amount I could spend against that loan has increased.
So what you're speaking about is an annual limit on compensation, and they're just expanding that limit because you're looking at an annualized salary amount spent each month. So they're saying technically over that longer period, you just need to spend that same loan amount, but it's limited at that $100,000, and for 8 weeks it's the $15,000, and for the 24 weeks it is that amount. So they're just saying the salaries can't be in excess of those two amounts for those assigned covered periods.
Okay, so it's 40. Okay, thank you.
Yes. I know that's complicated. Good question.
We have a couple more minutes for 1 or 2 more questions.
Tom, I think one may have come in a minute ago on the chat box.
Yeah, I see that. In theory, loan forgiveness payment could take up to 5 months, 60-day for bank review, 90 days. Yes, in theory, that's exactly what could happen. I don't know how that's going to interact with that 10-month window, because the language in that 10-month repayment window does say from the time that forgiveness is determined. So I'm not sure where exactly the applicant will receive a yes or no, if it's at the end of that 90-day SBA review as well, or if the bank's going to say, hey, we approved it, and that's something that you can rely on, and that'll be at the initial 60 days, and 90 days for the SBA will kind of be behind the scenes. I hope that wouldn't happen, because then that could mean the SBA would come back and say, hey, no, you actually didn't qualify for forgiveness once your bank said you did. So I think right now we're going to need more answers, especially since it all just changed. These timelines may change. So we'll have to keep a keen eye on what the SBA and the lenders decide is the best way forward, considering the changes in the Flexibility Act. Someone asked in the chat, real estate taxes paid for the whole day are covered.
Whole year, probably.
For the whole year, yeah, okay.
I have a question.
Yeah, sure, go ahead.
Okay. Regarding pay level reductions, if we have people that are salary plus commission, and their salaries have remained the same the whole time, but their commissions have decreased because of the COVID, do they count as a reduction, or do we just count the salary portion and say that they're okay? So
this one would go into the salary reduction. This is where you're going to be figuring that out. And I do want to be clear that there is some wiggle room there in that your salaries can't be reduced more than 25%. So if you're under the 25% reduction, then you'll be okay. If not, you could potentially face one, and that's just an unfortunate circumstance that has to do with maybe a rushed or flawed approach or implementation of the bill. But they will be subject to some type of reduction if the commissions made up a significant portion of their income and it fell below that 25% portion. But again, you have the get out of jail free card. You have the opportunity to get their payback and hope everything picks back up by December 31st. And that's when it's a great example of when you would start to rely on that extended timeline to get everything back to normal that was just introduced by the Flexible Act.
Okay, thank you.
You're welcome.
All right. Well, we're right up against it, it looks like. So thank you all for your participation today. You know, if nothing else, we looked back at the first one we did back on April 7th and saw how much has changed and how this has evolved since then. And it'll continue to do so, and we'll continue to be with it. But the slides will be available to everybody. I think we're going to send them out there. Those we have your contact information for. If you have anything in particular, please feel free to reach out directly to us. John, Tom, anything we missed?
I didn't think I get a chance to answer the real estate question. I think we did mention it before, but I don't think individual real estate taxes are permissible. I'd have to look into that further to be sure. I don't think they are. But if they were part of the lease and your lease payment does cover some portion of the payroll taxes that the owner of the building were to pay, I would say that they'd be included in theory. So that one, Unsure, 50-50.
All right.
Sure. All right, everybody.
Thank you,
Unless
everyone.
there's any other questions.
No.
All right, if anyone has anything else, they can contact us, send us an email. We'd love to hear from you, how we did. Everyone have a great day.
Yeah. Thank you all.